Economic Affairs Secretary, if I may start by asking you, sir, as we've been talking about it, this budget has really tried to address the 3 C's: consumption, capex and consolidation. And it's done well on each of those fronts. It seems to have prioritized consumption at this point in time with the personal income tax cuts. If I could ask you about the concern perhaps that there has emanated on capex, and the question coming in, the capex to GDP has come down from 3.4% of GDP in the BE of FY25 to 3.1% of GDP in BE of FY26. Is this an admission of the execution limits of the government or the limits to the absorptive capacity of the economy? And I'll link this back to the point that was made by the former Finance Secretary here on the budget verdict last year, when he also said that there has to be a limit to how much you can expect the government to do as far as capex is concerned, and perhaps at this 10-11 lakh crore rupees is the peak that the government can do on capex. So if you can explain the rationale, the thinking and the roadmap from here on.
Thanks for this question. I'll draw your attention to July budget, wherein Finance Minister said that we have brought the capex, public expenditure on capex, to a very high level, and moving forward our endeavor would be to maintain it relative to GDP at that high level and expect a similar amount to come from the state governments and thereafter private sector to chip in. Where we are in that one, till about 5 years back we were 1.5% of the GDP. That used to be the capex from union budget. Today it is 3% plus. But if we add what the grants Government of India provides to states for providing for their capital expenditure, prime example if you can say Jal Jeevan Mission, is a huge amount of provision getting made there. The total provision is 15.5 lakh crore, which is 4.3% of the GDP. And please look at the number, total fiscal deficit is 4.4%. Yeah. That means almost the entire borrowing of Government of India is going for capital expenditure. Since mid-70s we never had this revenue surplus. So these are the limits of capital expenditure, what the government can do, union government can do. But even with reference to the revised estimates of this year, the increase, the total provision next year 15.5% is about 18% higher on an economy which will be growing at about 10% plus. So these are the limits, and by sure, it is not a reflection of implementation capacity, but the newer sectors have to be brought in. Newer sectors meaning urban infrastructure is a big sector, and this budget provides for additional 10,000 crore for them. Plus social sectors have to be brought in, plus public-private partnership where the push has to be given through the renewed effort on that part. Thank you.
On each of those issues, sir, and if I could, address something that you just spoke about, the Jal Jeevan Mission, for instance. The question is, grants for capex to states include schemes, as you pointed out. It includes the NREGS, it includes the Jal Jeevan Mission, the PMAY, etc. A lot of it, which analysts believe is not technically capex. Why would you then include this to look at like the capex budget, is the question, sir.
See, there can be an issues around whether an asset, rural asset getting created out of employment generation scheme, whether that is a typical infrastructure or not, there can be a different opinion. But rural water supply will run into as large as 5 crore, 10 crore, 20 crore, even a 50 crore scheme. These are very much capital assets. So the only thing is, these are not the capital assets which will be on the balance sheet of Government of India.
Okay.
So even if we leave around that part, just come to that what the numbers are. Government of India is spending 3% plus of GDP, plus CPSUs is spending almost another 4.5 lakh crore, which will about 1.5% of GDP, is a substantial amount. The government system, union and central PSUs is spending close to about 19.5 lakh crores, which is 6% plus of GDP. So this is a significant number.
So there is no deviation on part of the government strategy to address growth via capex. That policy objective, that policy intent is steadfast.
That is correct. And there where the balancing were to come in, that on one side consolidation is happening, as you said, a fine balance between consolidation, consumption and capex. That is a fine balance this budget tries to do.